Good morning. I am Kiran Prabhu here, and I would like to invite you all to this special session of Beyond the Trade, wherein we are going to know a lot of things about trading in general and about even life as well. So the theme for the day is to learn from the past, adapt to the present, and thrive in the future. So this is the theme for the day, and to guide this forward, we have two amazing guests with us. Let me take this opportunity to introduce them. First off is Mr. Divakar, who is a veteran in the financial markets. He's got 20 plus years and he has seen so many life cycles of the stock market that he is what I can say is a source of a lot of important learnings for all new traders and investors. So welcome to the show, Mr. Divakar.
Thank you very much, Kiran, and it's my pleasure.
Thank you, sir. Welcome. Next, we have Arun Vashista. Arun is a very close friend of mine, and we got introduced very recently. But the kind of the way we hit it off has been something very amazing. And Arun is why what I could connect with Arun was his his perspective and the adaptability to the market. So welcome, Arun. It's great to have you here.
Thank you, Kiran. Thank you.
Thank you. Welcome, both of you. I am so honored to have both of you here. And, a quick introduction about me. My name is Kiran Prabhu, and I started my journey in the financial market some 14 years ago. I started as a learner, and I have evolved into a professional trader and a coach over this journey. And I'm also the founder of Ask Traders Hub, which is a community dedicated to impart this particular life skill to anyone who comes in contact with us or who is part of this community. So that's about all of us. So I would like to welcome you all again. So let's jump in and unlock some amazing trading wisdom. So let's start with Mr. Divakar. Sir, you have immense experience in the financial markets, and you have seen many cycles. The ups, the bull runs, as well as the bear runs, and the bust cycles also. So, what is that? What has the market taught you? As far as about discipline and patience is concerned.
Okay. Thank you, Kiran. And once again, it's my pleasure to be part of this show. And you are calling me veteran in this. And in
fact, sir, it is a form of respect to our elders.
So, yeah, definitely by age, yes, I'm a couple of years senior to you, but on the market, I'm sure both of you are having equal amount of exposure now. And anyway, to just review, yes, I've seen in the last 10 or 20 years, a lot of things happening in the market. The initial market was extremely small, and participation from the traders were very limited. In fact, we were not knowing with the friend circle or the relative circle that one is either investing or trading. That was the kind of scene those days. Yeah. So it has evolved a lot from the last 20, 25 years. And definitely I will go through a few of these things in the next few minutes. Firstly, coming to myself, I was into IT service business for 15 years. And then for last 10 years, I can say I'm into full-time trading. And whenever I was getting an opportunity, I was trying to invest and be with the market for the last 25 years. And initial days, it was like, there was only Bombay Stock Exchange. There was no NSE. And we used to invest our money with the information what we get from the local brokers. So they were like gods to us. Whatever they tell us or give us the information or input, that was the thing. We didn't know anything else. And there were newspapers like Economic Times, which were not subscribing. From the Indian Express or other papers, there used to be one page where stock prices used to be listed. And we were not, exactly know how things work. So based on the broker's input, we used to invest. And on the primary market, the system was, you get applications in the banks, and you have to fill it like 2 or 3 pages, and then along with the cash or check you submit in the bank, and that used to take again 15 days or 1 month to reach, and by the time we get some kind of a confirmation, it used to be a couple of months. If you are allotted, then you get back just a letter saying congratulations, so and so you are allotted. But if you are not, the check used to come back. So the funds used to be blocked for that amount of period. On the secondary market, yes, the broker used to take the commitment directly, and he used to be in turn has some connection in Mumbai, and they were dealing that. The unfortunate process was, the pricing, the price of particular stock, what we see on the newspaper, never used to match with whatever the broker finally tell us. There used to be a big difference between the selling or the buying price. So in between whatever losses was happening, we were unable to control it. Now you have the latest technology with you, and you have full control on what you trade and execute. So that is a kind of change what we have seen in terms of execution. And knowledge wise, yes, it was very difficult. Again, in those days, I used to rely on a couple of magazines like Dalal Street Journal, and whatever articles used to come, I used to read in that and pick up a few stocks. Yes, I have made some good investment those days, and based on the inputs from the magazines. However, the kind of exposure what we are getting now is amazing, amazing. And overall, the economic growth and kind of a monetary things are going on in the world or within our country, it's amazing. So you see almost in every family, there is definitely going to be one person either invested in stock market, if not trading, right? So
yes,
that's become extremely common now. And yeah, it's really going on well. And if you're now going to talk about something on the discipline or patience, which you mentioned, yes, see, when you invest or trade, it's very important to have a discipline way of approach. See, it's like, for example, sports. If you take sports, if you're a cricketer or badminton player or a tennis player, without discipline, you will not be able to achieve anything. For example, in cricket, if you have to practice taking a catch, I'm sure before the match, there would be 1,000 times the captain will make you, practice that. So
yes.
if you're not doing that, then it's not going to be working out well. So that is a discipline which makes you perfect. Here, when it's trading, you require a lot of discipline like that. Whatever you prepare before, theoretically, and plan for it, you have to keep that while trading. See, if you are going to change that approach, then, it may not work out well. So that is the kind of a discipline you need to adopt. And patience wise, yes. See, it's again, you cannot plant something, a rose plant, and expect the rose to come in a matter of time. It takes its own time, right? So if you invest again to get the returns, so you need to have a lot of patience. You need to do a lot of homework before invest. Once you do that, invest, you have to forget it. You have to have that kind of a patience until the market returns you back. So these two things, yes, are very important. And there is no hurry-burry concept at all. If you are here to make money quickly, I'm sorry, that's definitely not the place for you. So you have to have a time period, you have to have a patience, and you have to have that kind of a approach to go step by step and to be successful.
Yeah.
So
Thank you so much, sir. I mean, I could relate to the fact that earlier days when you had to rely on the broker for the information, and look at the newspaper, wherein obviously it would have been past data, and you could not match the real prices. You could not come to know the real prices. So actually, I can tell you that by actually undergoing all that, I am very sure your patience is at a different level altogether compared to all of us. So that is one big takeaway from your this one. And of course, about discipline, I know that since you have seen so many cycles, you also have developed a very strong sense of discipline. And as you rightly pointed out, it's not about making some quick money here. It is about maintaining that a disciplined approach, which helps us to create wealth. It's not about some quick money scheme here. So thank you so much, sir, for sharing that. Moving on, if I could know, in this whole journey of yours, you had maybe you can share with us one pivotal moment, which changed your approach towards trading and investing.
I mean, as I said, the day when I got the internet access. So see, I used to I used to have an account in the Stock Holding Corporation of India. So you go there, they were at least in the course of time, they're becoming modern compared to the earlier brokers, which I talked about. I don't even remember the broker name or anything, which I saw them in 1990s. But late 90s and early 2000, definitely Stock Holding Corporation was pretty good enough. But we still didn't have the internet access to do the trading on ourselves. So once we got that through the modern brokers like HSBC, Invest Direct, one of the, right now actually they are not there. So they were one of my first brokers, and it was a nice experience. The platform was the Nest, and it's not that kind of a speed what we see now, but it definitely gave me a wonderful feeling, because I could see the stocks and price movements and plan myself. And, that is definitely a lot of thing which happened. So,
great. I mean, yeah, please carry on.
Market wise, the turning point again, I can see in the last 10 years. See, probably I started trading when the National Stock Exchange was around 6,000 points on the full time level. But the turning point during the 2014, when the new government formed, the market had one of the first big rallies. So that also changed a lot of things. Oh yeah, the India is also now onto the competitive level, and you can rely on your investments or trades. So perhaps you can think about becoming a full-time trader here. So earlier that confidence was not there, So, but these kind of participation from traders, number of traders getting added up every day, made us, even me, take a decision on becoming a full-time trader.
Wow, that's nice. I mean, I could relate to when you say that when NSE was at 6,000, it just brought to my my mind that during COVID 2020, Nifty was again at 7,000.
Correct.
And in a matter of 4 years, we touched 26,000, and now we are back again at 25,000. So that actually shows how much of the robust our financial markets are. And I completely agree with your point that after 2014 has really been what you can say a golden age for the Indian economics, wherein a lot of people, a lot of retailers have come into the market. And of course 2020 corona added a flood of a new new breed of young people come into the market. Of course, it has brought its own things with that, because those people are not they have not learned it the right way. So that is one of the thing which is holding them back. But provided given that today's information age, I'm very sure that they will learn their lessons very quickly, and they'll embark on this journey on their own, on achieving their own financial freedom. Thank you again for that. Thank you again for that, sir. So coming to the next point, what I would like to know from you is, what do you think, emotions, what role emotions play on the long-term success? I'm not talking about short-term, long-term success. And how can traders learn to manage their emotions effectively?
See, it's like I'm a believer of manual, intervention in trading. So when it comes to emotion definitely is a very, very crucial role. So we all know it's 50% is the skill set once you learn, and the 50% is definitely the mindset to become a successful trader. So I also believe that. So if you're talking about long term with the technology adaptation on the algos and stuff like that, people who fear and cannot be participative into the live trading of market, perhaps taking those steps. And however, I'll tell you, on the long term, it's not going to be sufficient. Maybe if there is a day where the software will help you take all the things like a robot, and do whatever the market conditions and whatever the things happen. Morning, if you put 1,000 rupees, evening I'm going to give you 10,000 rupees back. If that day is going to come, we'll see that. But until that, emotions are going to be much better one to participate and be successful than non-emotional way. I'll give an example. See, we are all driving cars, and we are all good drivers. So, but there is a difference between driving an ordinary car and a formula car, right? You know that. So to drive a formula car, you need a plenty amount of controlled emotion. So the speed, like a 300 kilometers, to handle that is very tough. So one has to be really, really, cool and less. You should be able to handle that stress. So that's the kind of thing we go through while trading, maybe futures and options. So if you are not emotionally, controlled, then it's not going to work out. I feel it's very important, and it's going to continue in the long term also.
That's so nicely put. I like that analogy of a Formula One driver. Just for the benefit of our audience, let me tell you, all of us are good drivers, as Mr. Divakar pointed out, but we are all not Formula One drivers. The reason is, Formula One drivers start very young. They put a lot of practice on honing their skill, and it is not only about their physical strength, but also about their response time, how they react to situations, how they think on their feet, because the decision making has to be in microseconds.
Yes.
It is not even in seconds. So I like that analogy, sir. So this is what I talk about experience. So this is where it is. So thank you so much for sharing your wonderful thoughts. It has been great to know so many things from you. So now, let us move on and let us get on board our very dear friend Arun. Arun, I am very sure you had also a very lot of bulb-on moments listening to Mr. Divakar. So what do you see as what are those some couple of points what you picked up were very important lessons which you all have also learned. I'm very sure, and maybe you can share a couple of similar experiences which has shaped you to the person you are today.
So first lesson, matlab, it was listening to sir was just like matlab, unbelievable things. Like at that time when the market, when you get the trades, you are getting delayed prices, and you don't even know what the price that you are getting and what the broker is offering, is that the correct price, and you have to take losses. Matlab, you can imagine. So at that time, you cannot even think of becoming a full-time trader. Leave matlab, becoming even part-time trading. So it used to have taken matlab, lot of courage it would have taken to even invest money, because you don't know what is going to happen with your money, and even to put that money. Like right now we know that the government is there, SEBI has been formed, and everything is governed. So at least a broker, we can take the money, we can put the button, and just it will money will come into our bank, so we are safe. So we can think about full-time trading. So at that time, to become a full, even thinking about becoming a full-time trader, it's a big thing. Matlab, it's an unbelievable thing. And now I see the profile on LinkedIn. Everyone is writing full-time trader, full-time trader, full-time trader. So I don't know matlab, how many of them can even know what does full-time trading actually means, and especially to veterans like them. Ki matlab, how they
Yeah,
have been
maybe Arun, I mean, it's a very good point. Maybe you can share this definition of what you, according to you, who qualifies to be a full-time trader.
Because what me like sir have mentioned, first thing to become a full-time trader, at least you have seen some kind of a like downtrend market. So most of these people, that the people who have entered after COVID, they don't know what is a crash or what is a downtrending market. So they only know one thing: once the once the stock goes down, you buy it. Then it will come back. Again, they are buying. So every pullback, what they are doing, they are buying, buying, buying. But now, since the last 2, 3 months, when the market has gone into that downtrend, so then they are understanding कि मतलब the market can go down also. So that is the issue. They don't even know. So that is what I call these all these people. So after COVID traders. So I don't understand. Still, they can be qualified as full-time traders. So you
Yeah,
have to
it is.
experience this.
Yeah, it is just like those batch of COVID from the educational institutes. All of them had a 2-year holiday, and by the end of the time, they also received their degrees. But unfortunately, they have not learned anything. So it's that COVID batch.
So they cannot imagine the challenges that a full-time trader faces in the life. Matlab, how many cycles, like sir has seen so many cycles, like Divakar sir has mentioned. Matlab, he has seen Harshad Mehta's time he entered, so he has seen so many cycles. So he know what the importance of risk management is. These people don't even, like I asked them what is risk management, they don't even know. For them, they are only taking ki, matlab, every time a stock goes down, and you ask them whatever money they have, they are putting. Like people are advising right now in SIPs also. You cannot imagine it. It's not like that SIPs don't fall. They are thinking
Yeah,
they have been generating since the last 3, 4 years. They have been generating like 40 to 50%, especially the mid cap and small cap space. All the mutual funds are generating 40 to 50% compounded annually. How is it possible? But in the long term, the only return that is sustainable is around 10 to 15%. Maybe
yes,
1 to 2, 3% for mid cap and small cap.
that's all.
So
Yeah.
now they are going to face 50%. Now, if the market is going at 50% compounded since the last 4 years, now it has to adjust. So they are
Yeah,
going to be negative year also. So
yes.
you have to take that into mind.
Mm.
But these people will not understand until, and what will happen at the end, they will go just once they see 70% and 60% the portfolio down, they will exit and they will go
Exactly.
out of the market.
Right.
And
Right.
then the
Exactly.
fresh breed
So
of traders will
that is
enter in the next bull run.
yeah.
Fresh breed,
So that
yeah.
is where I feel so grateful and satisfied uh, on choosing this profession, because a good trader knows how to adapt to different market conditions.
Yeah.
So for us as traders, it actually doesn't matter whether the market is going up, down, or it is sideways. So we know what to do under different situations. So I think, as you rightly pointed out, I think this is the definition of, I mean, all the full-time traders, all the people who call them full-time traders, they should first ask them this question: am I able to adapt to different conditions, bull run, bear run, and sideways? If the answer is yes, then I think we can call ourselves as full-time traders. That's nice, Arun. Thank you so much for sharing your perspective. And I would like to continue with Arun. Arun, as Divakar sir shared about how difficult it was to place the order and all earlier, and they had to wait, and it takes the lead time was too much and all that. So how do you think the new tools and the new strategies has helped the investor and the traders amongst us?
Because there are two things to this perspective. First, obviously, now it has like ease of using all these tools. Now all the softwares are user friendly. Like today, you can just put a buy button and just go sell button, and you can sell. So they cannot even imagine that earlier used to look at the price. We don't know what is offering. So today everyone is getting. So obviously, life is easy. But what I feel now, the issue is information age. The issue is not that. So we are living in now information age. So information age, the issue is not that we don't have information. So the issue is we have lots of information.
Okay.
So
Information overload.
overload. So that is the issue.
Yeah.
So how to find how to differentiate between the relevant information and the
Correct.
irrelevant stuff.
Correct.
What I find, 90% of the stuff that is going around on YouTube and all these WhatsApp and books and all, they're all irrelevant. That is the big issue right now. So now this is just like that. Matlab, now the people are social media. So social media, you are getting, like earlier, like sir cannot check the price every day. Like it will only come in the newspaper next day. So at
Right.
least you could hold on to the trade for one day. So now you can check the price within every second. So, so the information overload has made it difficult to hold on to trades.
Mm.
And your
Yeah.
emotion management has become even much more difficult now. So
That's
More
true.
about
That's true.
aggression than patience
so
now.
the issue is, yeah, so people don't, like you see, even on reels, now Insta reels, they are only 1 minute reels. So if you put a 2 minute video, your video no one would watch. Only you have to make it within 1 minute if you want viewership, more viewership. But you cannot do that. If you are putting some relevant thing, you cannot make it. So same in trading. If you are going to you want to become a successful trader or a consistent, you want to make consistent money from trading, you need to develop patience. So the issue is the patience is lacking in people. That is a big issue.
Nice, nice. I know patience is the virtue of a noble man, is what they say. So it is very much applicable to all traders and investors for sure. That's nice. I mean, that's nice, Arun. So very nicely you put. So let us now move on to, since we were talking about mindset and risk management also. So I would like to know from both of you how you approached risk management, and how your strategy has evolved with your experience. So let us start with Divakar sir.
Okay. Yeah, see, basically risk management is the thing finally. Because if you are going to lose your capital, then what do you do next? So see, that I've definitely learnt in a hard way. And I went through this couple of occasions in my life. And, yeah, that's how this holds good now. I would definitely watch that if you have X amount of capital, the best thing to do is use only 50% of it. If you are having 1 lakh rupees as a capital, always trade with 50,000 only. Let the 50,000 be wasted in the SB account or wherever. do not touch it. You don't know when the city is going to demand that. The clear-cut example is now, for example, see the market is going down. If you have taken a certain trade or, if you have lost a lot of money, what will you do next? So having a buffer amount of this 50%, one is from the primary loss, you have escaped that 50%. And secondly, you are getting a second opportunity to begin again with this amount. So keeping 50% as a reserve is my way of approach now. And it's going to help every trader. In fact, a beginner should do this. Once you're experienced, maybe not at least 25% of your capital should be kept aside, if not 50%. So that's how you should do the risk management.
That's nice.
Yeah.
Yeah.
And on day-to-day trading,
Arun, what is?
Yeah, I'm sorry. Let me just
Please,
complete
please
the
continue.
trading part also. On the trading, of course,
Yes. Yes.
trying to keep as small stop loss as possible. If you're having a small stop loss, then obviously, if it gets hit also, no issues. You can start afresh after a 5-minute break or whatever. Then taking a very big loss and again losing that portion of a capital on that. So these two things are more than enough to manage the risk.
Nice, sir. Fantastic. Very nicely put. Arun, what do you have to say about risk management and the mindset?
Like Divakar sir has mentioned, then it just I remembered it's just like an emergency fund that he's proposing. Like we should have that 6 months, we say 6 months or 1 year earnings should be in your emergency fund for a financial. So that's what sir is recommending. In trading also, you should have one emergency fund. So if some emergency comes, so then you can use that fund. So that it just came to my mind. So yeah, sir has mentioned correctly. So risk management, one thing is like on your capital basis, you take, like I have this rule, ki matlab, I don't take 20% of my capital in a position. Matlab per trade, my maximum position sizing is 20%. So I don't go beyond that. And the next thing is my per trade risk. My per trade risk on basis on my capital. So that is around 1%. So suppose I have 1 lakh capital. So I will put only 20,000 in a trade. And out of that 20,000, my stop loss will limit the loss to 1% of my capital. That is 1,000. So I will not go beyond that. So at least to take me out, the market has to do 100 consecutive losses to me because I'm only risking 1%. So if I have to go to zero, I will. The market has to put 100% consecutive losses. Now that is obviously that is not possible. So that, and the second strategy I use is कि once I go down, if I go to drawdown of 10 to 15%, so I know my system. So I have now deep understanding of my system. If my system gives me 10 to 12, 20%, matlab 10 to 15% drawdown in my account, matlab 10 to 15 losers in a row, so then I know something is wrong with my system. So I have to adapt to the market. I have to learn whether my targets are coming or not. So if the market is suitable to my system, will I stop, take a break? So you need to have some kind of a system to understand what the market is. So that is what my limit I have kept. After that, I have to take a decision. I have to adapt to the market.
Very nice. I mean, both of you have given two, if you look at it, if you take a step back and look at it, both of you are actually telling the same thing. So what I could understand from both of you is, that you should only risk as much as what can not harm you, even if you lose. So I think nowadays, this thing is very prevalent. You go to internet and type about risk management. Everywhere you will you will find that risk 1% of your invested capital and target 2%. So 1:2 risk reward ratio. So this is what everything you can find on the net. So what it actually means is, even if you are, the fun fact is, even if you are right 50% of the time, you will end up being net profit. Why? Because whenever you're losing just 1%, and whenever you're winning 2%. So even if your accuracy rate is just 50%, you will end up in the profit. So this is the magic of having a a proper system and a risk management. So thank you, gentlemen, for sharing that. It was really, something which all of us should focus on. Moving on, this is something which is very interesting. I was waiting for this. So see, market is very, very unpredictable. People say that the moment I enter, it goes in the opposite direction. Okay. So this is something which I find very, very funny. Okay. So what is that, what is that one mindset shift both of you have made, to stay relevant in the present condition? So let us start with Arun on this one.
Because this is a thing what this realization came to me. First, I always thought, matlab, from the perspective like you mentioned. So when this is what the initial thoughts of a new trader are. Ki, matlab, you always think that market is your enemy. So always start with that. Ki, matlab, like market is doing something magic to you, black magic, na we call it. So every time we enter, then there's some black magic happens and the stock goes down. Okay, so then, but after some time, then I realized if you want to succeed in this business, there is only one way. You have to think. First, I used to think that there are two persons. One is market and one I am. So there are two persons that that we have to adjust. But now I am understanding after some years of trading, I came to this realization: the game is you versus you.
Yeah,
it's
only
not
you
you versus market. This is the thing we are thinking. That is not the game. It is you versus you. What is your objective? Like Ed Sekota, maybe I'm not pronouncing him right. So he has mentioned he's one of the greatest traders of US. So he mentioned with this quote: you get whatever you perceive from the market. So whatever we are expecting, we will at the end we will get that only from the market. So if you think market is your enemy, then you will always feel that market is your enemy. If you treat it as your friend, then you will find a way to adapt to the market. So then your whole perspective changes. So my perspective is now simple. Let the market do whatever it is doing. I have to focus on myself. Am I doing my system is correct? Do I have to adjust my stop loss? Suppose the market is trending. So I give it more room. As simple as that. If the market is not changing, so I have to look within myself, not the market. So I don't tell market, now you have to go in trending only. So now the market has changed, market has gone into like sideways. So I have to adjust my stop losses. I have to reduce my targets. Now I cannot expect 4 or 5 hours. Hours means matlab risk reward terms. I'm saying matlab, of my stop loss. Now I'm going to expect 4 or 5 times my risk. So now I can respect maybe 2 to 3 times. So I adjust it accordingly. So that is why you have to be adaptive. So who has to adapt? Not the market. Market is just like God. God is giving everything to everyone. Daily there is money flowing in the market. It is you, how you want to extract that money. So you have to adapt to it. So this perspective changed my game completely. Once I understood it's you versus you, not you versus market.
Nice, Arun. Thank you so much. That's it. Sir, Divakar sir, your perspective on this. What is that one mindset shift which has kept you relevant even today?
Yeah, see, we need to, we should not hurry up. We should not hurry up in, jumping on to a trade thinking, we are going to miss it.
Yeah.
So that will never happen. And we have to believe in the market in such a way that it's going to come back and give you what you want. So I was telling you, Kiran, probably on our last call that it's like running, on long distance running. So if you are in the beginning stage, you will feel a long distance running is impossible. You will get tired as soon as you complete about half a kilometer or so. But when you practice every day, you will reach a stage where it becomes so cool. You will control your breathing in such a way that you can run as long as you wish. 5, 10, 20 kilometers doesn't matter. So, see, you need to adopt to the market in such a way, so close that you will get a feeling. You'll start getting a feeling that this is how it's going to work with me. And when you go along with that, actually, you sail so smooth. It's immaterial looking at the points. Today is 23,000, tomorrow is 26, day after tomorrow is 27,000. Doesn't matter. doesn't matter. You got to be with that condition all the time. And old saying of the trend is your friend, you must be knowing. It's it's simple thing. You don't need big indicators and past test, all those things. Just see what's happening in the market, where it's trending that day. Be with it comfortably, believe in it. It works really well. It really works.
Yeah, that's so nice. I mean, so I was so happy to listen to both of you. For our audience, I would like to say is, whatever we spoke for the last 10-15 minutes, the foundational principles of trading and investing remains the same. It is evergreen. Let it be from the 50s, 60s, or whatever, or the 2000s as far as India is concerned, and even into the future. Okay, the basic concepts will remain same. So instead of focusing on some complicated strategy and having too many indicators and developing a complex system, I think all of us should focus on keeping it simple, relate to your life experiences. Like, I like the point where both Mr. Divakar and Arun shared that, make the market your friend. It's not your enemy. It is your friend. All you have to do is just go along with it. Don't try to go against it.
Yeah.
Just go along with it. And let me assure you that it will be one of the most promising, fulfilling, and exciting journey what you had have taken ever in your life.
Correct.
So that is what I would like to share. And thank you so much, both of you, for sharing your insights. It was really nice. So let us, increase the pace now, and let us come to the next section, which is called as a rapid fire section. So what we will do here is, okay, I will ask one question, and I want a very short and snappy answer, not too long, very short answer. So I will ask the question, and we will go with the sequence of Mr. Divakar first, then Arun, and then me. Okay, and then we will come to the next question. So the first question is, I will start with Divakar, sir. Sir, your go-to trading strategy?
Well, buy on dip on a breakout.
Fantastic. Arun?
So I am like short-term swing trader. So my strategy is like 2 to 6 days or 6 to 15% move. That is what I focus on.
Fantastic. And my go-to strategy is simple. Identify the trend and just go with the trend. That is my strategy. I know that is with me. That is my strategy. So the second rapid fire question is this: what is the biggest mistake traders make?
Well, again, hurrying up on the trade, which I just said now, they want to jump into the trade. Already market would have moved 100, 200 points, and you want to catch that. That's the mistake they do.
Yeah. Arun?
Yeah. What I feel is there are 100 ways to make money in market, but to lose money, there is only one way. You take a big position size and then you lose money. That's it. And you don't put a stop loss on add up to that. Don't put a stop loss. Take a big trade, 100% of your position of your capital, and don't put a stop loss.
That's nice. That's nice. The according to me, the biggest mistake they feel is that once they come into this winning streak, they think that they are the god. Okay, so this I feel is which it's not true. You have to stay grounded. So that is where I feel is the biggest mistake. What most of the traders, they get overconfident. So that's what I mean. Okay. The third one is, what is that one thing? One thing every trader should unlearn.
I mean, from my side, I think nothing. Nothing. Whatever we have learned, probably, it's been useful one or the other way. So there's nothing which I look at as to unlearn.
That is experience speaking. Nice. Arun?
I think especially the indicators, like whenever I see a chart, if I see lot of indicators on a chart, then I know that complexity never gives you money. Actually, that's what I have found out. If you want to be a long term in the market, then you cannot have a lot of complex things. You have to keep the system simple. Whatever you do, it doesn't matter.
Yeah. according to me, what is that one thing what a trader should unlearn is they should unlearn their bad habits. And it depends from person to person what that bad habit is, but I think they should unlearn, because see, why I'm telling this is because they must have learned it in a very wrong way, so which would have resulted in a lot of bad habits, which they should identify and unlearn them as early as possible for their own benefit. Okay, so that is what is my take. And now, okay, let us come to this one exciting, the final thing. What I wanted to know from all of you is, what is that one market trend or news or something which you are currently watching very, very closely? Divakar sir.
I'm definitely watching for the FIIs to come back. And if there is some news that they're going to bring the funds again to India, then that's good. That would be the best news.
Nice, nice, nice. Arun?
Mostly, I don't track any news, I tell you, because I'm a very short-term swing trader. So I
Okay.
don't track any news.
No, I'm not
I
talking
just track
about any
charts.
news.
So I track my
Yeah.
charts.
Okay.
So I just track charts. If the charts give me a signal, I take a trade. If it is not giving me a signal, I stay out. That's it.
Okay. Nice, nice. That's very strange. Keep it simple. Nice thing. The one thing market trend what I'm watching closely is something about crypto. Okay, crypto, and especially in this one in terms is in Bitcoin. I'm not talking about all those hundreds of different coins which are there. I'm talking about the real, real crypto, which is Bitcoin. So what happened was, since I started my full time into this profession since January 2024. But in October 2023, I was just going through my system, and I use technical analysis basically, and I found that Bitcoin was at a very good price point at that particular time. This was October 2023, and it has been exactly 1 year. I would just like to say that last year, 2023, one Bitcoin was at $20,000, and today I just checked it today morning. It is $93,000.
Yeah, I know. Yeah.
So I am closely watching this, not because of anything else. Of course, I invested a very, very small amount. I just invested $50 because, as we all know, being a trader, we cannot put all our eggs in one basket. So I took a very small risk of only $50. I have 0.003 Bitcoin. So yeah, that is something which what it reinforced into me is that the technical analysis, if you understand it correctly, can actually help us to identify the entry points with precision. So it reinforced that into me. So that is one thing which I am following very closely. So nice, very good. This has been such a great conversation what we had over the last 45 minutes. So let us wrap it up with some closing thoughts. So I would like to ask Divakar sir, if you can suggest one thing to aspiring traders, what would that be, sir?
Yeah, see, basically, you go to college and get graduate and then start your work or do business. So if you do business, definitely you start with carefully with a smaller capital, and then in course of time increase. So it's very simple. Adopt in the similar way here also. Go with a smaller capital. Give yourself a chance to learn 1 or 2 years, and then of course you will be on the game in full-fledged. So if you wish I had universities degrees on stock market, and where people could go and complete and then come back and here trade. Unfortunately, that's not the scene right now. But traders are jumping on to get the full level thought on day one, which is wrong. So they have to go a little slow. That's all. That's all.
Nice, sir. Nice. You actually have brought to the forefront one important point, that unlike any other profession, investing and trading does not have a structured way of learning. So it is a very valid point, and I think we being part of this industry and having involved ourselves into this profession, I think we should be looking at doing something about this, of maybe making this knowledge in a structured way, so that people can learn from this structured way and reduce their learning curve. I mean, ultimately, it is up to them how they use the skill, but at least they will not have to undergo the kind of learning curves what all of us have gone through.
Right.
Okay, so that is a very, very strong point what you have shared, Divakar sir. So thank you so much. Arun, what do you feel as a closing thought? Is what is your vision on the future of trading, and how do you look at yourself contributing to that vision, Arun?
So, now I'm also mentoring traders also since the last few months. So that is what I have observed actually. What they are doing, that they are thinking that trading is a degree. Like I wrote one post also on LinkedIn, is trading a degree or a skill? So you have to understand the difference. By reading books, by reading videos, and by reading only watching YouTube videos and books and blogs, you cannot learn trading. Skill needs practical skill, just like a business. Like you go to MBA, but it's not like that. After MBA, you learn all the real life skills. So trading is a real life skill. So you need to understand the language of trading. Trading is you study charts. But what people are doing, people are wasting their time and energy on watching videos or one strategy after another. That is what they're putting a lot of cognitive load on them. Then even if they find a good strategy, they cannot unlearn it. That is the issue today. So they are putting so much cognitive load in their mind. They are making it much more complicated than it is. So you need to understand, like you mentioned, I think the best way to learn a skill is go to a mentor. Otherwise, like you mentioned, what is the role of a mentor? It's not like that you cannot learn without a mentor. But the role of a mentor is to reduce the learning curve. Maybe we took it 5 years, 10 years, so we can reduce it to maybe 1 year, maybe 6 months, maybe.
Right.
So depending on that person's skill and his learning capability and all those things, so we can reduce it. We can give him a direction. But if you are going to overload yourself with so much information and just reading, but don't go near the charts. Like whenever a new trader comes, that is what I'm asking. Even if they have been trading like after COVID traders, that is what I've observed. They don't know about reading charts. They know everything about strategy, which they have learned from books or watching some videos. They know all those things. They know I've learned. They come to me. I know a Mark Minavini strategy. I know this strategy. I know this strategy. But I ask them, how many times have you put it on backtest? And manual backtesting? Now they are so much focused on this, software backtesting. They just put button and the software gets the results. But once you put it in real life market, real time, then whole of their system goes through. Because emotions are involved. Backtesting cannot give you emotional results. So emotions are something different. Instead of wasting the time on videos and all, sit through charts, do some exercise, like sir mentioned, put some small capital and try taking trades and build some skill. So skill means you need to practice it. That's it.
Fantastic. Thank you, Arun. Thank you, Arun. I just remembered this statement what you made when we had a conversation earlier. It is like people want to come into the stock market and they want to be successful the next day. It is the same like you going to a driving school and you not even sitting on the driver's seat on the opposite side, and you want to go drive that car at 200 miles per hour. So I remembered that example what you shared earlier.
That is the point.
Thank you so much, Arun.
Or you can say,
thank you so much. Yeah,
you can take the example of even
yes, sir.
People who go to gym nowadays a lot, right? So to build their body, can you build a body in just a matter of a couple of months or 1 month? It takes years to shape up your body. So that's
and Divakar sir rightly pointed out, and it is the amazing thing is, see, just going to a gym doesn't build a body. You need to take care of your diet, you need to take care of your rest cycle, you should give it a recovery period. lot of things. So
Yes.
it is not that simple. I mean, see, nothing in life is simple. You have to put in the work, you have to dedicate yourself, be passionate about it. Only then we can expect to achieve something. I mean, even then the results are not guaranteed. Only then. So, like, fantastic. Both of you have put it so nicely. For me, the trading journey has been one of continuous learning and self-discovery. I call myself a lifelong learner, not only about trading but general life as well, because that is what keeps us focused, keeps us relevant, and it's all about having the right mindset and embracing discipline. Okay, so I think that is the only, what you can say, the foundation for long-term success. So fantastic. We are almost on time. We had planned that we will do a 60-minute session. So we are right on time. So this again shows that discipline. Exactly. Fantastic. So we are walking the talk. We are not here just come here to preach you and all those things. We don't believe in preaching, but we do one thing. We practice what we preach, all of us. So that is one thing. And to all our listeners today, the key takeaways is discipline and patience. So that is the bedrock of a successful trading and investing career. Then what you can have, the second one for me, the takeaway is emotions can be a trader's greatest challenge as well as its greatest teacher. So how you manage your emotions decides in or how far you will go in this. And the third takeaway for me from the whole conversation was the ability to adapt. Okay, adaptability is a must. Okay, the market is very dynamic, it keeps changing. Until and unless we are adaptable to change, I mean, to mold ourselves to those changes, uh, we are not going to be successful in whatever we are doing as far as trading and investing is concerned. So that were the key takeaways. So I would like to thank Divakar sir and Arun for sharing their wonderful insights. And I am really so grateful that both of you accepted to collaborate on this. And as I had mentioned earlier in our discussion, this is going to be something which is going to be very, very special for all of us. And I'm very sure this discussion adds a lot of value to our viewers. Okay, so one thing I'm very sure about, whatever we are doing right now, is we are at least setting the right values and the right foundation on which people should embark on this journey. Because as we all know, a strong foundation is essential for you to build a skyscraper. If you want to build a skyscraper, you need to have a strong foundation. So that is what all of us are trying to do here. So thank you so much, both of you. And
thank you, Kiran.
This
thank
is Kiran Prabhu.
Yeah. Thank you, Kiran, for giving us the opportunity.
Signing off. And yes.
And thank you, Arun, also for sharing your thoughts. It was nice sharing the
thank you,
show with you.
Thank you.
Thanks very much.
We got a lot of knowledge from your experience. Yeah.
Thank you.
Yeah. Thank you. So is mutual here. So it is, that is what actually I always strongly believe in. So we should always look at taking along everyone. It is not about competition, or it is not about feeling, oh, okay, I know more. All of us have been lifelong learners, and we should remain learners. So and we would look for such episodes. I would with one thought for with all our viewers. Okay, this is something which I strongly, and this is something which has molded me to whatever I am today. This is one thought. What I strongly believe is this: if you are good, or if you become a good trader, okay, you will inevitably become a good.
Okay.
Yeah.
Yeah,
if you are already a good human being, you have all the qualities to become a good trader and an investor. So this is the closing thought from my side. And See you all.
Very
Thank
well
you
said.
so much. I had an amazing fun having this session.
Same
Thank you.
here.
Thank
Thank
you,
you
sir.
so much.
Thank you, Arun.
Thank you,
Bye.
Divakar sir. Thank you, Kiran.
Bye.
Thank you.
Okay. Bye.
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 Bye.